Okay, so get this. Claude has just completely changed the game for how we can interact with the stock market. There's a new skill that lets it tap into live data, see what Wall Street and even US politicians are buying, and then automatically place trades for you based on that information. This is a huge leap forward. It makes these really sophisticated strategies something that basically anyone can use.
So we're going to treat this like a level up journey. First, we'll get a handle on the gap between regular folks and Wall Street. Then we'll actually set up our own AI trader. After that, we'll build a simple automated strategy, then learn how to copy the insiders, and finally, we'll tackle an amazing income strategy.
First up, the Wall Street gap. Before we dive into any of the tech, we really have to understand why this matters so much. And it all starts with this massive built-in disadvantage that everyday investors are up against. Yeah, so for the first few years of my career, I was at JP Morgan, and man, I got to see how institutional trading works from the inside. That experience just made it crystal clear how tilted the playing field really is between Wall Street and, well, everyone else.
And it really comes down to three, let's call them unfair advantages. First is data. They see when a billionaire makes a massive trade or when a senator buys a stock right before a big policy announcement. You don't. Second is execution. Their systems are automated, running 24/7. And third, intelligence. They have whole teams of people and crazy expensive tools just to figure out what to do with all that data.
This poker game analogy is perfect. I mean, think about it. Would you ever sit down at a poker table where you can only see your two cards, but your opponent sees every card on the table, plus they can see the cards in your hand? No way, right? You'd be insane to play. Well, for a long time, that's basically been the stock market. But now we can use AI to start evening the odds.
All right, enough about the problem. Let's talk solutions. We're starting at level 1, just getting the tech set up so Claude can place trades for us.
And you know what? This part is way easier than you think. It's really just 4 quick steps. First, you download the Claude desktop app. Second, you sign up for a free brokerage account with a service called Alpaca. It's designed for this kind of thing. Third, you just generate what are called API keys from Alpaca. And finally, you just copy and paste those keys into Claude. That's it. You're connected. Okay, super important pause here. I have to say this. This is purely for educational purposes. I am not a financial advisor, and this is absolutely not financial advice. Everything we're doing here today is in what's called a paper trading account. That means we're using fake money to trade in the real market. It's basically a simulator, so you're not risking a single real dollar. Okay, level 2, your first automated strategy. So once Claude's connected, it's kind of like a car without a driver. It's ready to go, but it needs instructions. So let's build our first simple bot.
And the absolute best way to think about this bot is like a smart thermostat in your house, right? You don't stand there all day turning the heat up and down. You just set the rules. Like, if it gets below 68, turn on the heat. And it just does it. The bot works exactly the same way. We set the rules once, and it handles the rest.
So the first strategy we're going to teach it is a classic called a trailing stop. It's a really simple protective move. You basically set a price floor for your stock, and as the price goes up, that floor automatically moves up with it. It's designed to lock in your profits and protect you from any big sudden drops. Let me show you how it works. It's super simple. Let's say you buy a stock at $100. You tell Claude, okay, if this stock ever drops to $95, sell it immediately. That $95 is now your protective floor. The most you're willing to lose on this trade is $5. Okay, now let's say things are going your way. The trade is working out and the stock price climbs up to $110. Pretty good, right? And this is the magic right here. The trailing stop automatically moves your floor up from $95 to $105. So now, even if the stock completely tanks the next day, it doesn't matter. It will sell at $105 and you are guaranteed a $5 profit. The floor only ever goes up, it never goes down. You set the rule one time and Claude manages it for you 24/7.
Okay, pretty cool, right? But that was us setting our own rules. What if we could just copy the people who always seem to win? Welcome to level 3. Let's teach Claude how to copy this smart money.
So who is this so-called smart money? Well, we're talking about 2 main groups. First, you've got your whales. These are investors throwing millions of dollars around in a single trade. They have research teams and all sorts of private data. The second group, and this one is kind of wild, is US politicians. Yep, members of Congress consistently beat the market.
Why? Because they sit on committees that regulate entire industries and get briefed on huge policy changes way before you or I ever hear about them. And if you're wondering if this actually works, just look at the data. This chart shows a backtest. If you put 50 grand into the S&P 500, you'd have made about 15%. Not bad at all. But if you had simply copied the trades that politicians were making, your return would have been almost 35%. That's more than double the market just by following their lead.
All right, it is time for the final level up, the ultimate income strategy. We're going to tackle something that most people think is way too complicated, stock options. But don't worry, we're going to use a really simple analogy to make sense of it. Honestly, the best way to wrap your head around options is to forget about stocks for a second and think about car insurance. Seriously, with car insurance, you pay a premium, and in return, you get the right to file a claim before the policy's expiration date. If you don't crash your car, the insurance company just keeps your premium, right? Well, stock options are exactly the same. You pay a premium for the right to buy or sell a stock at a set price before its expiration date. If you don't use it, the person who sold it to you keeps the premium. It's identical. So if buying an option is like buying an insurance policy, what if you could be the insurance company? That's the whole idea behind something called the wheel strategy. You get to be the one selling the policies and collecting all of those premiums week after week. Let me walk you through how this wheel keeps spinning. You start by selling a put option, which just means you get paid a premium today to agree to buy a stock you already like, but at a lower price. If the stock never drops to that price, you just keep the premium and do it again. If it does drop, great. You get to buy the stock at a discount you wanted. Now that you own the stock, you start selling call options, getting paid another premium to agree to sell it at a higher price. The wheel just keeps turning, and you're potentially collecting income at every single stage. Now, this strategy it's amazing for generating income, but most people just give up because, honestly, it's a massive headache to manage all the moving parts. The prices, the expiration dates, all of it. It can be overwhelming. But for an AI like Claude, it's just a set of rules. It can handle all of that complexity for you. No sweat. And that, right there, is the whole point. We've gone from a world where Wall Street had every single advantage in data, in execution, in intelligence, to a world where AI can completely level the playing field for you. It can run your strategies perfectly 24/7 without emotion. So the question isn't, can you compete anymore? The real question is, now that AI can trade for you, what are you going to teach it?